Is this morning's Bitcoin price action just an April Fool's joke? Welcome back, everyone. Hope you had a great weekend. That's right. We are recording this on April Fool's. And yeah, no, I'm not the kind of person that's going to sit there and, try to fool all of you guys. But maybe Bitcoin's price action today is trying to fool a lot of the lettuce hands or the weaker hands. Anyways, so here we go. Let's dive into it very quickly. This is an article out of Cryptopolitan. Federal Reserve pushed to heighten rate cut measures. That's right. I think that there's a lot of Bitcoiners, myself included, that believe that really they kind of don't have, the Fed doesn't have much of a choice but to lower rates. Otherwise, essentially, they're just going to start to cause the overall economy to start to crater. So they're walking this very fine tightrope, okay? They cannot stop printing the massive amounts of money that they're printing, but the issue is that they have to be careful what they do with interest rates so as not to completely destroy the economy by doing things too strong. So again, right, this is why we need these financial alchemists, because essentially this system constantly has to be fine-tuned as it moves along. Otherwise, it'll just completely fall apart. This is why we pretend that the monetary policy theater that we watch matters. Right? Because yes, it does. When you're dealing with fake money that is released into the system and removed from the system, based on these quote unquote experts, these are the types of things that you get. Anyways, let's dive into it because I think they're not going to have much of a choice. And let's take a look here. Tony Dwyer from Canaccord Genuity predicts the Federal Reserve will make deeper cuts due to a weakening job market and lower inflation, which is kind of weird because we've been constantly hearing how strong the job market is. So that's a bit of that's a bit of a contradiction. Either way, I know that when it comes to statistics and data, you can make stats look like they are for or against anything. So what does that really mean, right? What does it all mean? Anyways, employment data inaccuracies are raising concerns with the next job reports highly anticipated, and rate cuts could benefit sectors like finance, consumer goods, industrials, and healthcare, which are already performing well this year. Some people may say it's convenient. Some people may say that it's not happenstance. I'm kind of that camp. Of the people that believe that we're just essentially watching a story, or watching a movie play out, and there's a whole bunch of actors and they play their part, right? We're all, who was it? Was it Shakespeare that said all of the world's a stage, so, and we're just actors. That really wouldn't surprise me. And the reason why I say this is because we're seeing the perfect setup for essentially what I've been saying is going to be a massive bubble. Okay, and it's going to be, I don't know if it's just going to be a massive digital assets bubble. I don't know if it's going to be some type of like a leveraging bubble. I have no clue. I don't claim to be a financial expert or anything like that. I just take a look at the world around me, and what I'm seeing is that I'm seeing institutions, right? Like BlackRock, okay, talk about tokenizing everything they possibly can. So that definitely right away, I mean, if you think that this is any different than traditional shitcoining, you're wrong, right? Creating tokens out of thin air, it doesn't make a difference whether BlackRock creates those tokens, whether Fidelity creates those tokens, or whether some shitcoin company creates those tokens. It's completely irrelevant. It makes no difference. But what is actually different is the perception. It is the perception that changes, and that's what matters. And all of a sudden, when BlackRock and these big legacy finance or these big legacy firms start to create these products, it creates this idea that they are more trusted by the overall market. And the overall market falls for these things, okay? The overall markets fell for this stuff in the dot-com bubble. The overall market fell for these products in the mortgage crisis, okay, and leading up to the mortgage crisis. So it is not history that repeats itself. It is our behavior. Anyways, to me, this was supposed to be a bullish clip, but I also at the same time try to remain down to earth. So guys, don't look at what they say. Look at what they do. We're hearing this talk about the lowering rates. Yeah, I want to believe that the government is going to quote unquote stimulate the economy and whatnot. But at the same time, I think we should remain cautious. Okay, definitely remain cautious, and just remind ourselves. They're not really, these people that are making the decisions, they're not making the decisions in the best interests of the average person. They're going to make decisions that are in the best interests of themselves. Okay? So it really is, at the end of the day, it really is individual incentives that drive us. That does it for today. Like, subscribe. I am going to catch you all tomorrow. Do not get sucked into the hype.